Welcome back, everybody. We're in the thick of earnings season, and today we have three more companies to talk about: Apple, Visa, and Google. And the market reaction for these companies has definitely been a little bit weird, so let's take a look at what's going on. And we'll go ahead and start with everyone's favorite stock to bash, Apple, because as you know, there's no growth, it trades at too high of a valuation, all those things we've heard a million times. So we'll start with what they guided for last quarter. This is their transcript from Q3 2024, and they basically said, we expect our September quarter total company revenue to grow year over year at a rate similar to the June quarter. And remember, we talked about this. I really hate how Apple does this. They never just say, we expect it to be 5%. They're like, oh, we expect it to be about the same as the previous quarter. And then you go look up the previous quarter and none of it's there. So it's just really annoying. I don't know why they do it this way. It's like they're purposely trying to be like obtuse.
How can you be so obtuse? What did you call me?
And so if we go back to their previous quarter, their revenue was actually up 6%. So I guess we can assume that revenues would be close to or around 6% as their guidance. And they also expected services revenue to grow at double digits at a rate similar to what we reported in the first three quarters of the fiscal year. Why? And then we expect gross margin to be between 45.5% and 46.5%. Now, as annoying as this is actually a really great use case to use Notebook LM. So that's what I've been doing for Apple. I literally put all of Apple's stuff into Notebook LM, and then I ask it to create me a little table so I can easily see what all this stuff is without having to go back and forth and try to manually calculate everything. So if we take a look, we can see that previous quarter growth rates are here, and then this is the growth rate for the current quarter. It's a little bit messy, but the information's all there. So we can see that from a total net sales perspective, last quarter they had a growth rate at 6%. This quarter it's at 4%. So a little bit slower than it was last quarter. But then if we look at specifically for services, it was 12.3 last quarter, and this quarter it's at 14. So that's an acceleration, which is nice. And then if we take a look at the gross margin, last quarter it was 46.2%, and this quarter it is 46.9%. So in general, Apple, I guess, pretty much hit their guidance. Their revenue growth was a little bit slower than last quarter, but the services growth was accelerated or higher than last quarter. And then obviously their gross margin was a little bit higher as well. It was actually higher than the range that they gave us. So, overall, it pretty much looks like what they told us. And that's kind of been the case for Apple over the past, handful of quarters, it feels like. And if we take a look at the trends here on these charts, which I think are kind of interesting, you can see that, iPhone growth is just one of those things that bounces up and down to slightly negative to just slightly positive. And, this is the ongoing story that everyone's been talking about. Now, my opinion on what's going to happen with this hasn't really changed. I said, I think maybe a year ago, that over the next year to 18 months, we should see if there's going to be a refresh cycle that kind of kicks iPhone revenue growth back into gear. As of right now, we have not seen that. I do still think at some point the iPhones from 2020, 2021 are going to need to be refreshed. And when that happens, I would be very surprised if they didn't get another iPhone. But, time will tell. But obviously, the best story in terms of Apple revenues over the past year or so has been the double-digit growth of services. And that's one of the reasons why their operating margin continues to go up, because services are actually a high-margin revenue stream, right, compared to their actual products. So, it's a good story. It's just one of those things where services revenue isn't quite at the level of where iPhone revenue is. So it's always going to be a discussion point each quarter about how come iPhone revenue growth isn't there, Apple revenue growth overall isn't there. And that's why people say it doesn't deserve to trade at a 35, 37 PE. So before we move on, let's take a look at their guidance for next quarter, because we just like to punish ourselves. They talk briefly about how they think the macro outlook is going to be worse coming up here. But despite that headwind, we expect our March quarter total company revenue to grow low to mid single digits year over year. We expect the services revenue to grow low double digits year over year when you remove the negative impact of the FX headwinds I described earlier. The year over year growth rate would be comparable to that of the December quarter. So about mid-teens or a little less than mid-teens if you take out FX headwinds. And they do expect gross margin to be between 46.5 and 47.5, so continued expansion of their gross margin as the services revenue grows, and that's a pretty good story. So if we look at their earnings history, we can see that Apple's been pretty steady at beating their earnings estimates. And, at the end of the day, this is a very slow, slight up and to the right uptrend. So, I guess that's something. So in terms of the market reaction to Apple's earnings, it was a little bit strange because after hours, it was up pretty big and people were like, why, what's going on? It actually opened the day up pretty big. And then it was just basically a sell-off the whole day to where it ended up actually down, I think, -1% or something on the day. And so it was just kind of a weird price action to have. And if you look at the next couple of days, it's kind of stayed down in that area. But in general, it's been down as other things in the market have been down as well. So the initial positive reaction is obviously gone, and it's basically been down since earnings. All right, so what are my thoughts on this? Now, I know everyone loves to bash Apple because when you compare them even to their big tech peers, they're clearly the slowest growing out of all of them. They trade for a high valuation, kind of in the 30s, kind of mid to high 30s. And everyone says, well, why? It doesn't make any sense. This is a dead company, all that type of stuff. I have a slightly different opinion on it. Clearly, I hold Apple and I've been holding it for, when did I buy it? July 2023. The facts are they are still considered the dominant premium phone in the highest profit generating region, which is the US. Their customer satisfaction scores are about as good as they can be. They're like 96% overall. And I think the iPhone 15 kind of group of phones was like a 98% customer satisfaction score. Apple's growing high margin services at double digits and continues to do so, even though phone sales growth is slow. So like we mentioned before, their gross profit margin is slowly inching up, and they continue to make extremely high quality products like the Mac with the M series chips. And if we just look at a high level, they're making almost $400 billion in top line revenue each year, and they're giving away over 25% of it back to shareholders in the form of dividends and share buybacks. And while people love to make fun of Apple for their lack of creativity in AI, I actually think they're doing exactly what they should be doing in that space, given what their core product is, right? Like they're not chasing LLMs, and everyone criticized them about that. And then when all the DeepSeek stuff came out, everyone's like, oh, Apple's really smart because LLMs are a commodity, which we already knew that was going to happen anyway. But what Apple's doing is simply integrating machine learning and generative AI into their products and partnering with other LLMs for just broad general questions. And they're doing as much as possible on device with their integrated hardware and software stack, which, funny enough, is exactly what we talked about in July of 2023 when I added them to my portfolio. And for Apple, in my opinion, that's actually a winning combination given what their core product is. Look, the iPhone is a lot of people's most important device. It has a 96% customer satisfaction score. The last thing you want to do is drastically change it every year. So all they're doing is making it incrementally better each year, adding new features as they go, and making a ton of money and giving it back to shareholders. So I think the biggest issue with Apple as a stock is that people's expectations are a little bit off. Like, it's not Palantir, it's not Cloudflare, and it's not even Meta. Like, people shouldn't expect this massive constant growth. Now, I do think eventually they'll get a refresh bump as those 2020 and 2021 iPhones get replaced, but they're a more stable grower now who makes a ton of cash and buys back shares. Now, you may say that that's not worth 37 PE or whatever they're trading at, and that's okay, but there's plenty of companies that are trading at weird valuations for various reasons. And contrary to popular belief, fundamentals isn't only what drives market price action, and we're going to talk about this a little bit later. But overall for Apple, it was a quarter that was pretty much like their last handful of quarters. It was pretty good, and it was what we expected, and for me personally, it's just a little under 10% of my total portfolio, and for now at least, I plan to hold. Now, if there ends up being a really great opportunity out there in the market that I really want to take advantage of, then my Apple position may be one where I consider trimming, but I have no plans of getting out of it completely, and at least for now, I'm just going to hold and see what happens. Overall, I love their products. I still think they're well positioned to continue generating a lot of money and overall cash flow, and we'll just see what the future brings. Okay, so let's move on to Visa. Now, if we look at Visa's previous guidance for Q1, they basically expected high single digit net revenue growth, high single digit to low double digit operating expense growth, and low double digit diluted earnings per share growth. And if we take a look at what they actually reported, they had net revenues up 10%, so that looks good. Non-GAAP earnings per share up 14%, so that also looks good. And actually, we can look at their presentation to see the rest. Again, net revenues look good. Operating expenses were up 11%, so right there at the top of that guidance range that they provided. And then again, 14% earnings per share growth. So overall, it looks like Visa pretty much hit on all of their guidance. And, if you followed this stock for a while, this is nothing new. Like Visa is one of the most, dare I say, boring companies to hold because every single quarter they come out, they do what they said they were going to do, and the stock does reasonably well over time. And ho hum, rinse, repeat, and that's what you do next quarter as well. And if we take a look at their guidance for Q2, they have net revenue growth, high single digit to low double digit, operating expense growth again, high single digit to low double digit, and earnings per share growth at high single digits. So a slowdown a little bit in terms of revenue and earnings per share growth. But if you look at their full year 2025, net revenue growth is now low double digit and earnings per share growth is now low teens. So it looks like they expect a little bit of a slowdown for Q2 in certain areas, but still overall for 2025, they actually slightly increased guidance for revenue and I think earnings per share. So overall, that looks pretty good. Then if we just take a look at Visa's earnings per share history, we can see that they're consistently beating analyst estimates. They do expect a slowdown here in Q2, which we kind of talked about that on the previous guidance slide. And, again, this is slowly rising up and to the right, and that's kind of what Visa does. Now, in terms of how the market reacted, Visa basically started the day up big, and just like Apple, just kind of died for the rest of the day and was down for most of the day. So they ended the day a little bit negative. Actually, I think it was like 0.5% or something like that. But, their trend over the past 2 weeks has just been unbelievable. I mean, it's just straight up. So even though they were down that day, they've come back up and they're now, basically above where they were before earnings. And then in addition to all that, Visa also did another $5 billion in share repurchases and dividends in the quarter, which, and I said this before, right? But Visa is just one of the boringest stocks that I own. And I say that in the nicest way possible. I mean, they're so consistent in terms of what they do. And every single quarter, they come out, they have their presentation, they hit their guidance. So their understanding of their business is one of those things that as a shareholder, I get a lot of confidence from, right? It's not one of those companies where they give you guidance and then when the earnings come out, it's like all over the place and they were totally wrong. And there was this big headwind that they didn't, know about or prepare for. With Visa, it's just like, here's what we plan. Here's exactly what happened. Maybe there's a wrinkle or two, but we were prepared for it. And what you're going to get is close to 10% revenue growth, double-digit earnings per share growth, and a trend that's just slowly up and to the right. So, it's just one of my favorite companies. There's just not much more I can say about it. I mean, in terms of my strategy, they have an extremely strong tangible market advantage. They have an extremely dependable secular trend of digital payments and e-commerce, and they're the market leader. So we can dig into infinite numbers of charts and numbers and fundamentals to try to come up with reasons of why you should hold another company, but Visa is amazing, and all the reasons why I initially bought them are still there. That story is still intact. So I'm holding. I have no plans to sell. They're awesome. All right, lastly, let's get to Google. Now, I could have swore that Google used to put their guidance in these earnings press releases, but I went back and looked and I couldn't find it, and actually looked in their transcript and I couldn't really find their guidance there either in terms of like revenue guidance or earnings per share guidance. They have guidance for things like CapEx and all that, but I don't know, for some reason I couldn't find it. So we're just going to skip over it and talk about what they actually did, and we'll go from there. Now, in terms of their current earnings, their revenues were up 12% year over year to $96.5 billion, which is quite frankly a lot. Their services revenue increased 10%. Cloud was up 30%, which obviously we're going to talk about that here in a minute. And operating income increased 31% overall. And now a consistent story with Google is that their operating margin has continued to go up. So from 27% last year to 32% this year, which is a pretty significant increase. And if you look at their earnings per share, it went from 164 to 215, so over 30% gain in earnings per share. So if we just take a step back here, we're talking about 30% earnings per share. And we talked about this a little bit with Meta, right? Because they had a great quarter. And, people were a little bit down on Google's quarter, but the reality is this: they had, revenue growth of 12%, earnings per share growth of 30%, Google Cloud growth of 30%. Those are all pretty strong numbers, right? I mean, I just talked about how great Visa's quarter was, or maybe great's the wrong word, just how consistent their quarter was of, earnings per share growth of 14%. Well, this is Google. They're a bigger company and they had 30%. So, I think sometimes the narrative gets out there and we feel a certain way about stuff, but, that's still a pretty strong quarter. And so if we take a look at how the market has reacted, well, this is basically for today. And you can see that Google started the day or ended the day yesterday at 206, and they basically came all the way down here to like 190. And yeah, they're down a little over 7% for the day so far. And we'll just kind of see where the day ends. But clearly the market kind of took that and sold off. But I mean, look, it came up a bunch right before earnings, and then it's basically just come down to where it was just like a few days ago, right? So I think we take these things and we're like, oh man, this is a huge thing. Everyone's panicking, but it's really just, it's prices you haven't seen since 5 days ago. Like, is that really a big deal? I don't know. And now with Google's earnings, I also put their stuff in Notebook LM just to help me see everything a little bit easier. And when you start to look across the board, I mean, these are pretty strong numbers, right? You have Google Search up 13% year over year, YouTube up 14% year over year, Cloud up 30%, right? And those are really your big hitters. I mean, other than subscriptions, platform, and devices, which was only 8%, which obviously contributed to bringing down this Google services number. I mean, overall, that's pretty strong stuff across all product lines, right? Having Google Search continue to be growing 13% with as mature as that business is really is a strong thing. So it begs the question of, okay, well then why is the market selling off and why is the narrative all negative about Google? Now, most of the reaction I see online is about the CapEx, right? Because I think the estimates for CapEx for Google were like 57 billion, and they came out and said, we're going to spend 75 billion in 2025. And, people freaked out. They didn't like that. They're spending more, right? So if you're looking at it just based on fundamentals, then it looks worse than it did before. But I tweeted something out about that yesterday where I said, look, Google's a leading tech company, right? Aggressively investing in a huge technological shift. And honestly, I think we should expect them to do that because Google's business is different than, say, like Apple's business. Because Google's competing on all these different fronts. They're competing in digital ads with Meta and Amazon. They're competing in cloud with Amazon and Microsoft. And they're competing in building large language models with OpenAI, Meta, Anthropic, DeepSeek, and the list goes on. So I think it really comes back to understanding why you invested in a company in the first place. Like if you want Google to be this kind of more stable cash cow that keeps making money and keeps giving it back to shareholders, well, that's not really what they're doing. That's actually more like what Apple is actually doing that people are criticizing them for. With Google, they clearly view the AI stuff as a huge opportunity, or maybe more accurately, an existential threat to their core business if they're not one of the winners. So they're investing accordingly. And to me, that makes perfect sense, right? Like I think sometimes we get too caught up in like DCF models and finance related things when we're evaluating a business because we're conditioned to believe things like, well, free cash flow growth is what makes the stock price go up, or good valuations means great returns in the future. And the reality is that maybe it does, but not always. Like the market is made up of a bunch of different entities. You have some people that trade on valuation and free cash flow growth. You have others that trade on price momentum. You have others that trade on technical signals, and then even others that trade on fundamental signals, but not the same ones that you do. And I see so many people every time earnings come out being like, oh, the market makes no sense because, they beat on this and they beat on that, and yet the stock went down. And you're assuming that everyone trades and invests the way that you do and looks at the same things that you do, but they don't necessarily. Which is why I always say that there's no one right way to do this. Everything is about probabilities, which means that success is never guaranteed. Now, for me personally, I mostly use fundamentals because I think over the long term, they're the most predictable way to increase your chances of success. And it just happens to be an area where I feel like I have some experience and I have some skill. But I've told you guys before, like I will look at technicals on occasion as well, just to see price movements. And I did that with Cloudflare, and it actually worked out really well so far. So again, the main thing with Google or any other stock that you invested in is knowing that nothing is ever guaranteed, right? Everything on some level is a bet, and you're just playing the probabilities based on the research that you did. So as long as the story that you bought into is still there, the things that you liked about the company are still there, then there's no reason to get too up and down based on what the market does on any given day, because it could be something that has nothing to do with your investment thesis, or it could just be something that lasts for a day and goes away and everyone's like, oh, maybe it wasn't a big deal overall, right? So the easiest way not to get caught up in that is remember why you invested in something in the first place, monitor it based on those things that are important to you, and if it hasn't changed, then just relax. Now, as for me and Google, it's currently my smallest position because I trimmed it late last year in favor of Meta and Amazon. Now, I still personally believe that Meta and Amazon are going to outperform Google over some period of time, but that's just my hunch. I still think Google's a great company and likely a long-term winner as well. Now, if you guys missed my earnings recap on Amex, MSCI, and Meta, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.